Good morning, ladies and gentlemen. So we're going to run through this morning watch list. I'm working on some very remote Wi-Fi, so hopefully this uploads properly for you guys throughout the next couple days. So here is the 1-day, 1-minute chart on the S&P 500 currently. What I want to do is obviously go to our longer time frame first and map these levels off for you. So right now, this is the daily chart time frame of the S&P 500. All right, so you can see we've bounced, and we've really just been kind of fighting and trading sideways off of this dotted line in the middle, which is our half standard deviation mark on the daily chart, and just over our 4-hour trending support. So you can see last week we came down, held support, then we bounced up just a little bit. So most important thing I think we can do for the time being is match up our trend lines and support. So let's put one here at 332.04. We're going to take a look at the daily chart again, and we're going to put one right in the middle on that dotted line at 333.73. Now when we go back and look at the 1-minute chart, you're going to see that those two support levels are pretty far from where we're currently trading at. And you can see based on how we traded last Friday, we are practically sitting over Friday's highs. Okay, so right now a lot of traders and a lot of the market are going to be looking to hold us over the previous highs of Friday's trading session, and it's possible that we do dip down, lower to these 333 areas, and it does exist within the intraday time frame. So for the time being, I think we still got to stay on the bull side for right now, just to see if we can really clear up over Friday's session and start pushing back up maybe towards those 346 prices and so on. Okay, now I want to take a look at the Qs. All right, so if you look at the Qs, a little bit different looking, obviously, than the S&P. You can see we ran up to our 4-hour trading trend line and back down. Let's take a look at the daily chart, see if we have any interaction points for the time being. All right, if we look at the daily chart, you would see that Friday we came down fairly close to the daily chart trend. We held and bounced. So let's take a look at the 1-minute chart now. All right, so the daily chart support for the Qs or the NASDAQ is all the way down here at 272. And I gotta say that right now the Qs definitely look a little bit worse than the S&P 500 does for the time being. Also, something very important that I wanted to mention, if any of you guys use TTM Squeeze indicator, you're gonna see here that we're starting to get some mixed emotion between the TTM. You can see we're starting to shift red here for the past couple trading sessions right there, red dots. Essentially, that's causing some mixed emotion there in the market, and it's even worse, believe it or not, on the SPY. The difference here is you only have the mixed emotion coming in on the 4-hour time frame for the S&P 500. You can see down here, and it's actually more significant. Okay, so pay attention to that. TTM 4-hour time frame is going red. For any of you guys that use that indicator, many times that can be a leading indicator that you're getting some mixed emotion, and it might be time just to put things on pause or stay more neutral bias. Now, if we go over and look at again the NASDAQ, the difference between the NASDAQ and the S&P is that this is starting to occur not on the 4-hour time frame, which is usually more likely. This is actually occurring on the daily time frame, which is usually more unlikely. So very, very interesting. Okay, so for right now, the markets aren't necessarily on any significant trending supports or any significant trending resistance. So again, that's partially why I believe if you look at the SPY, over the past, call it 5 days, we've been kind of in this more kind of sideways market because we're not really on any support, we're not on big resistances, so we're kind of just fighting, and the market's just really waiting to pick a direction over these couple of day consolidational periods. All right, a couple other things we'll probably take a look at here is just the United States dollar. So we're going to go over take a look at the dollar. If you've noticed over the past, call it week or so, maybe 2 weeks, we're starting to see more mainstream media outlets, whether you want to call them mainstream, you have Business Insider, I can't remember the other one, it might have been Yahoo Finance, don't take my word on the Yahoo Finance one, but definitely Business Insider. But we're starting to see some of these more mainstream media news sources, at least from the online side, starting to come out and press more on the dollar crash or seeing a decline of another 35% in the United States dollar over the course of the next year. Now, this is something we've been mentioning for God knows how long. So for right now, you can see the dollar is declining. TTM again is shifting red here. So for the time being, we are starting to see negative pressure come back into the dollar. Now, if you think it's going to drop, like I do, you're really watching this here price point of 93.48. Once the market successfully crosses through 93.48, you're most likely going to see weakness into the United States dollar, and that's where things might get a little bit more painful. But before we go through there, typically you're going to see a bounce there. So it might happen today. It probably will happen today. Let's see where we're at. It's debatable. See, you can see the price point we just put there at 93.40 exists 3 standard deviations away from your average. So in the event markets come down to 93.48, 93.45 here, you'll probably see a bounce on the dollar before it would actually crack. So either way, we're still bearish the dollar. And check this out. Once it goes through the 93.48, your next target down is going to be 92.50. So without even looking at gold this morning or silver, based on the way the dollars moved from Friday's trading session into the morning, you can be sure that gold's probably up. So let's go take a look at the gold futures here. And look at the gold futures. You can see the gold futures are up. And they basically mimic that of the United States dollar. So let's go back, take a peek at that. Hop back on over to the gold futures, right? So just take a mental picture of the dollar here. You see how it's performed? Now go look at gold. If I type that in right, actually. So let's go look at gold. You're going to see it's performed almost picture perfect, identical, but the opposite. Okay, so gold's on the move, and really, I'm heavily invested in gold. We got a lot of silver as well. You can see silver's up a little bit here this morning. That's actually the silver ETF. But if we want to look at the futures, it'll be /SI. You can see it's somewhat of a mirror image of the dollar, but opposite. So again, we're starting to see some buying pressure back into the precious metals, and that's because you're seeing that dollar get more weak. All right. So we're still long gold, still long silver, and your dollar doesn't look so good. But what do you expect when your government prints trillions and trillions of dollars and the American people want to keep buying that bullshit up? It's going to happen. It's going to drop. So start looking around in some of the mainstream sites. You're going to see that people are projecting another 35% decrease in the dollar. So if you want my take on that, I usually look for long-term projections on the dollar using the 20-year chart. So my next big down target that I believe we're going to see in the dollar is going to be down here at 87.13. So where we're currently at to where I believe we're going would be a decrease of about 6.2%. Okay. Now, the markets are only going to get super shaky on the dollar if you crack below that point. So for me, I'm anticipating we go down to about 87.13 on the dollar as a 6% decrease. You're going to see a bounce there, most likely. And if you crack that, that's where just the market's going to get just annihilated on the dollar. So pay close attention over the next 6 months to a year. Dollar gets below 87.13, it's going to be a shit show, and your gold's going to go flying. Okay, now we can move over into a couple of the stocks I guarantee people are going to be talking about today. MYOK got bought out, or it's going to be some sort of merger deal here. You can see the price is gapped up by about $185, something like that. Big jump. It's a buyout is what it appears. Just by looking at the price of the price action, it's probably a buyout. Yep, here we go. So MYO stock soars toward a record after a $13 billion buyout with Bristol Myers. So again, MYOK got bought out. If you're watching the stock, you might as well not even trade it today. It's not going to do any sort of action. It's going to trade completely sideways. Remember that when one company gets bought out by another company, that's one company coming in and saying that the other company is worth X dollars. So why should the stock price move after one company agreed to pay $13 billion for another company? They basically just told you what that company is worth today. So again, there's no more speculation on what share price should be when another company just told you what it is. All right. Move on over to KOS. This was a penny stock this morning that jumped up, crashed right now. There's probably a couple people watching this. I haven't put too much effort into really looking behind it. I can't really wrap my head around KOS for now. I'm not a big fan of it. Just based on the way we kind of sold off here, once you get one of these drastic sell-offs pre-market, it's a little iffy and you're probably not going to trade it. Take a look at your TTM. You got mixed emotions there in the red. You're probably not going to get too much action. And if you are going to follow it, probably track it down at 128 for a bounce. That'd probably be your best bet. Something else that jumped up earlier this morning pre-market was ENLV. All right, so if you take a look at ENLV here, big jump, already faded sideways. I wasn't up early enough, but this is probably a stock that I would have looked to short. I might still be looking to take short positions on that today, if anything. Here's something that might be interesting, CRVS. Okay, CRVS here has actually got a little bit of momentum going on it right now. Yeah, so if you're up this morning, take a look at CRVS. This might continue to be good. It had a jump pre-market, traded sideways. Now it's going through a little bit of a short squeeze. And there's a level right at 637 that I think the markets are trying to break out. Let's just double check. Yes, 637, 644 would be the daily chart, 3 standard deviation, and the 180-day chart. No, just the daily chart. So the daily chart resistance is 640. 4-hour resistance is 686. Through that point, you can see a nice pop on the stock. So let's see if that's what the markets are trying to do. I definitely believe that's exactly what they're trying to do. So keep an eye on, again, CRVS for maybe a break point over that 650. And as that happens, heck, you might even see it push up more towards the 850s is very, very possible. Okay? So again, do keep an eye on that. Could be a good long play. And really, guys, that's all we got for here this morning. Again, working pretty remote right now. Not going to be doing too much trading. I'm not going to be super active in the market. Just going to be breaking down these watch lists for you guys throughout the week. So hope you guys learned something new on this. Everybody, take care. Have a great rest of your day.